Hey everyone, Charting Man Dan from ChartGuys.com. Behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Checking in on Twitter GPRO X and CMG on the daily and weekly time frame. So the Twitter bulls not seeing much follow through on this bounce at all, especially compared to other tech names. Really a very weak bounce and a potential bear flag. As long as we cannot get over these exponential resistances, the possibility of it being a bear flag is definitely remaining here. And we're looking at support of 17. Make that 1676 and 1627, break those levels, and we see another leg to the downside. So at this point, it's up to the bulls to prove to us that they are regaining this trend, and they're nowhere near doing that. We haven't even seen 2 green days in a row since back in May. That's 6 weeks. I take that back. That is 2 weeks without seeing 2 green days in a row. So very clearly the bulls are struggling. And the weekly time frame, trying to hold this middle Bollinger Band, the gap to the downside filled last week, and this middle Bollinger Band is 1638. So this is a bullish reversal candlestick. And what needs to happen for these bulls is a close here or better on the weekly time frame, and then next week they have to see follow through. So what that would look like on the daily time frame is a bounce attempt, continuation of the lower highs, but then we form a higher low and a higher high. And if we get that higher low and higher high, the weekly time frame will confirm a bullish reversal candlestick. So at this point, it's all about the exponential moving averages and seeing a close above those levels to have any kind of confidence in these bulls. We also have the 50-day moving average support holding 3 days in a row. That's at 1689, and we continue to close above it, so that's a good sign. But other than that, there's really not much that the bulls have to cling on in the short term at this point. We'll see if they can follow through tomorrow, keeping that 50-day. And that 50-day is ascending, so if we continue to hold it, we will see some slight increase in price. GPRO, again, you've heard me talking about this for 2 weeks if you've been watching these videos. The 50-day moving average resistance continues to reject the price. This is now 6 rejections in the past 7 days. Close at the low of the day. Bulls are not going anywhere until we close above this level. Support is down at 830. 828 and 820 as the first 3 levels to be watching. And if we see a break of this 830 level, I would be comfortable going bearish and looking for a breakdown and looking for this gap to begin being filled, because the bulls are not showing anything to us. Not only can't we get over the 50-day, but we haven't even been able to test this weekly middle Bollinger Band, which has been continuously rejecting the price. We haven't tested that in 3 weeks. So that resistance is down at 865. No bullish reversal candlestick confirmation. We're rejecting from exponential resistance. So all kinds of moving average resistances as our gauge of strength. And it's very clear we could have guidelines where if we do go bearish, we will exit if we close over the 50-day moving average. Or if we want to get more wiggle room, we will exit if we close over the middle Bollinger Band on the weekly time frame. X on the daily time frame. Inside bar, and it is a higher low pattern still remaining intact. So after 2 days of profit taking with upper wicks, I would say the bulls are pretty pleased that they were able to hold the higher low pattern. 2172 and 2175, the lows of the past 2 days. If we were to break those lows, we know that consolidation is coming, and we know that the bulls will then have to form a higher low in order to keep this oversold bounce in their favor. So seeing a little bit of toppy action, still keeping that higher low pattern, but break those 2170s tomorrow, and we will look back down towards the middle Bollinger Band, which is in the mid to upper $20 range. Weekly time frame for X is still a potential bear flag. We're rejecting from exponential resistance just below the 200-week resistance, and right now there's no follow through here on this bounce attempt. So until we do see that 200-week moving average become support, the bears do still have potential to see a weekly bear flag and continuation to the downside. So keep that in mind. If you are a bull on this bounce on the daily time frame, sure, it's been going well the last 2 weeks, but need all time frame perspectives here, and the weekly time frame would definitely have me concerned as a bull. CMG trying to get follow through from the bullish reversal candlestick, but an upper wick of profit taking, rejecting from exponential resistance. So it too is still a potential bear flag until we can get over those exponential levels. In terms of resistance, we're looking at 468.04, and then the 50-day moving average is up in the 473 range tomorrow, and support is down at 452.20. and then 445. So at this point, the bulls haven't proven anything on their bounce attempt. A little bit of upside, sure, but no real convincing follow-through as long as that exponential is resistance. That being said, we do have a bullish reversal candlestick forming on the weekly time frame, so bulls want to close here or better by the end of the week, and then we'll be looking to next week for the bulls to try and confirm this. And we're going to be looking for a higher low and a higher high to form on the daily time frame if the bulls want any chance of confirming the weekly bullish reversal candlestick. So need to see a bounce attempt, consolidate, higher low, and then a higher high, and that is what will give us some convincing bullish action on the weekly time frame as well. But as of right now, still struggling at exponential resistance, just like the Twitter bulls are as well, and have to get over those levels, otherwise the bears remain in control. I appreciate you watching. We'll check back in tomorrow, FOMC, 2 p.m. Eastern. Will have some effect on volatility in the market, and need to be aware and heads up when that comes down the pipeline. Have a good night.